guys, welcome back to the Fear and Be Average trading channel. And today I'm going to be going over everything you need to know about order blocks. So let's get straight on into it. The first thing I want to go over is to look for order blocks to be created at certain times of the day. So for example, you want to look for order blocks to be created possibly during the London session or during the Asian session. So if you're trading the New York session, you can anticipate price to possibly have retracements to these order blocks to possibly have a move. I'm going to show you some examples of that right now. So let's look for an example during the Asian session. In fact, we found one right here during the London session. Right here, you can see that we have this order block right here. I'm going to use this box to show you. We have this order block right here that was created at 2:30. So this is during the London session, and you can see that we had a clear of these lows. So we can anticipate that once price trades into this order block, we could potentially keep trading higher. So in this case scenario, it wasn't that much of a move. After trading into it, we went up about 90 pips. But if you would have got into this somewhere in the middle and had maybe a 30 pip stop, that could have been a 1 to 2 trade. But we're not going to pretend like you did or didn't. So we're going to find better examples of more clear trades. So for example, you can see this one right here was created during the Asian session. This is an order block created during the Asian session. So we're going to pull it over. We're going to anticipate price to possibly trade into it. You can see that at 10 o'clock, 9:30, we push down, 10 o'clock trade into this order block. We can anticipate price to trade away from this order block based off the fact that we're overall creating higher highs and higher lows. We're trading into an Asian session order block that is more likely to be respected because of when it was created. And you can see that once price traded into it, it came to about, filled almost all of this order block before potentially getting all the way up higher. I'm going to find you another example of using a London session or a possible Asian session order block to frame potential trades. So you can see, I'm just trying to find some random ones real quick. Right here, see this down candle or this up move right here? This is a potential order block that was created during the London session. And I'll use the box so it's clear for you guys. But this whole order block right here. Price then traded back into it, I'm assuming at 9:30. At 9:30, price traded back into it before then having this rally higher. And why was this order block respected? More than likely it was respected because it was a bullish daily buy. So the overall direction was bullish. So we were paying attention to the order block being created during London because we know if price is going to have a London continuation since it's a bullish day, we can anticipate that it's more than likely going to respect this order block that was created during that London session. Why? Because we don't want to see the lows of the day get violated. And as you can see, it didn't get violated. It came close, trading into this order block before continuing higher. So that's an example of using using other sessions timing to frame order blocks. Next thing, higher time frame order blocks are way over lower time frame order blocks. So for example, I'm going to show you a few right here. As you can see, based off of these higher time frame order blocks that we have right here, this daily order block, I'll use the box again just for you guys to see it clearly. So we trade into this order block, and you can see the moves that were happening off this. Because keep in mind, guys, this is off the daily time frame. So based off of trading into these daily order blocks multiple times, you could have been bullish for multiple days, for weeks at a time. And you can see based off of just getting in or near this daily order block, you could have potentially caught 1,400 pips, potentially caught 1,100 pips. From over here, you could have potentially caught 1,800 pips based off of these higher time frame order blocks. And when you're trading off of higher time frame order blocks, there is a way greater probability that it's going to have a move. Why? Because big banks and institutional traders are trading off of the higher time frames. They aren't on the 5-minute charts, the 15-minute charts, day trading like we personally are. They're trading long term based off of higher time frame analysis. So if you can frame higher time frame analysis, you can then formulate a bias for your daily intraday bias. So if you know what is more than likely happening based off of higher time frames, higher time frame support resistance, higher time frame Fibonacci, such as you pull your fib from this low to this high, you can see when it was respecting this daily order block, it was also respecting this Fibonacci also. So we had multiple confirmations for why price should likely have a reaction. And you can see when it had its reaction, it was major. And this is based off of the fact that it's off of the daily time frame. So I'm gonna find you another example of a daily time frame possible move. So let's see, right? Did we trade into this order block right here? Yeah, we did right here. So we're gonna use this example right here. This down candle or this up move right here. So once price traded above the high of this down candle right here, that is when the order block is now valid and you can wait for retracements. So what we could have done, we simply could have waited for price to have a retracement back into that order block. We also pulled our fib. So you can see we waited for price to trade back into that order block, trade into that 62% of this Fibonacci that we have drawn from the low of that order block to the high of where price stopped before retracing. And you can see that from here, price started to push all the way higher, giving you a potential move based off the daily time frame. You can see this is about a 1700 pip move based off of the higher time frame. So that's one thing you always want to keep in mind. I'm not saying lower time frame order blocks are never going to be used, because they will be. But if you could frame high probability setups based off of higher time frame order blocks, I'm telling you from experience that you're going to have a greater probability of winning that trade and having a trade that could last days or weeks at a time. So that's one thing to keep in mind. So keep higher time frame in mind. You keep lower time frame in mind, but always keep higher time frame analysis in mind, because the higher time frame dictates the lower time frame. Next thing, refine all of your order blocks. I don't know if you guys have seen my refining order blocks video, but if you haven't, make sure you refine them. And if you don't know what refining an order block is simply finding the halfway point or the 50% of an order block, and you can possibly wait for price to trade into it. And in this example, if you would have waited for price to trade into the 50% of this order block to look for potential trades, you would have had the greatest trade of your fucking life. If you would have got in at this daily order block at this 50%, this is a crazy trade. 1700 pip move potential, and you could have possibly had a 324 pip stop at max, because you're keeping in mind this is a daily time frame. You're not going to have a 50 pip stop because you don't know how far a price can move. So let's say you kept your stop below the order block, which is about 324 pips, for a potential 1700 pips in the span of, how long is this? This is about, I gotta do sideways, in the span of about, yeah, I'm fucking up. In the span of about 15 days, you could have got a 1 to 5 risk reward, which is crazy. 1 to 5 in 15 days, that's 5% in a month if you're risking 1%, and that's 10% in a month if you're risking 2%. But I'm gonna find you another example of refining order blocks of when they're working and when they are not working. So let's see. Let me go down to a lower time frame, because we don't always have to trade on the daily. Let's say, for example, right here, we have this daily order block, not daily, this 4-hour order block right here, from this candle, this high to the low. Let's mark up to 50% of it. Let's refine it and see if price potentially traded into it. You can see in this case scenario, once price traded higher, this candle came all the way back down to about the 50%. Could have gave you a potential trade opportunity, and when it came back down, it went up about 750 pips. And then every time it retraced after that, it didn't come to the 50%, but then it had another move, which was about 640 pips. Retraced once again, came back into it, which was about another 1100 pip move. Majority of the time, the best way to refine these order blocks is refining a higher time frame order block and then looking for potential trades based off of the lower time frame. So I'm going to show you guys right here. We have this last up candle before this down move, which is right here. We have this 4-hour order block. Let's refine it. We're going to get to 50%. And you can see price traded into that 50% once, but then tapped it one more time before having a big drop of about 840 pips based off of basically this. But now let's say we go to the 30-minute time frame. We understand that we're looking for potential drops in this area. We see that we're staying at this 50% mark of this daily order block. We can see that it's also around 12 o'clock, so we can anticipate a possible retracement or reversal. And all you could have done is had your stop right above the order block, which is about 68 pips, 60 pips, 55, depending on your broker. All you could have been looking to do is possibly trade from order block to order block. So you could have been looking to possibly trade to this order block down here, which would have gave you a 1 to 3.5 trade. And this is before the real move. So say price trades back into this area once again, like it did. But now it's respecting this order block inside of this 4-hour daily order block. And we also see that after we traded into this order block that we also have, we trade back to the 50% of that higher time frame order block. We could potentially look for another trade again. Have our stop outside of the higher time frame order block, which is about 80 pips. Potentially trade back to another order block. Like I said, you could trade order block to order block. So you can trade back to this order block, which is going to give you a 1 to 3.6.9 trade, which is crazy. And then the price keeps going lower and lower. And overall, you possibly could have had a 1 to 10 trade if you would have held it for 1 to 3 days. Personally, I don't, but I'm just showing you guys the power of refining these order blocks. You can get a great stop loss on these trades and having a great reward just off of refining it. So refining order blocks is very important. Very important. They're not always going to be traded to the 50%. Sometimes you're going to miss moves trying to hold it there. But just keep in mind, the trades that you are able to catch are going to be great trades, high probability, and you're going to have a very small stop loss, which gives you the minimal risk for the maximum reward, which is what we like to go for as traders. Next thing, not all order blocks will give massive moves. And that's something that a lot of people need to understand. Because just because price trades into an order block doesn't mean it's going to fly 100 pips. Doesn't mean it's going to fly 50 pips. It can move just 20 pips away from that order block and then trade right the other direction. But you just want to keep in mind that at these order blocks, usually this happens on lower time frames. At these order blocks, you can still anticipate possible moves. Just because it's not going to be a 100 pip move doesn't mean it's not going to have a move. As you can see, I'm trying to find one. You can see this week hasn't been the best. It's just been all pushing to the top. So I'm trying to find good examples of order blocks being respected short term. You can see right here. Right here, we're gonna use this last up candle before the down move. We're gonna pull it over. You can see that price traded into that order block once, started rejecting, and dropped about 60 pips, 60, 70 pips. Then what happened afterwards? Price then pushed up higher, trading into an order block all the way up here before then retracing. But even though this isn't the main order block that was being respected, you still see that there was still a reaction from this area. Still a reaction. Wasn't 100 pips, 65 pip, 75 pip move, but it wasn't a major move. That's just one example of showing you that these order blocks aren't always going to be respected and aren't always going to give massive moves. I'm going to try to find another one. For example, right here. This last down candle before this up move, right here. You see price traded into it, right here, at about 3 in the morning, then traded higher. This gave you about a 70 to 80 pip move. Then what happened afterwards? Price immediately started to go the other direction. This is another example of price not giving you a massive move. It gives you a small move that you're able to capitalize on, but it isn't a long-term move. You got to keep in mind with all these areas, because just because you're trading off on an order block doesn't give you the maximum potential of winning a trade. There's still a good probability that it won't be respected. That's why you have to keep higher time frame analysis in mind. You got to keep all confirmation in mind. You got to keep time of day in mind. Just all these different characteristics that you got to pay attention to when taking trades that you just need to know. Not every order block is going to give you 100 pips, and you need to understand it. Okay, and we're going to move on to the next one. The more order blocks in an area, the better. So for example, let's say we have a 4-hour order block, right? We have a 4-hour order block, but after refining that order block, say to the 50%, we go to 30-minute or 15-minute time frame. We also see that in this general area that there's a 15-minute and a 30-minute order block at this 50%. This gives you a high confirmation that there could be a potential trade based off of being inside of a higher time frame order block trading to the 50% of it, and then you see that you're trading into a 15-minute order block or a even lower time frame order block. And I'm going to try to find you some examples of that right now. So let's use this one right here. Let's just use these last 2 down candles before this up move right here, because if you go to say the 8 hour, I'm pretty sure that would be like 1 order block. You can see it right here, the 8 hour 1 order block. We're going to mark up to 50% of it. We're going to refine this order block down. In this case, it doesn't really trade to it, so we're going to see. But we're going to look down to the lower time frame. We're going to go down to the 30-minute now. And we can see that we had also many more order blocks within this small area. We had this 30-minute order block. Now let's go to the 15-minute. You can see that right here, this last up candle before this down move, we're going to pull this over from the high of that candle. We're going to pull it all the way over. All the way over. And we're going to see how price respected it. Look at that. Right here, based off of the 15-minute, you can see price came into this 15-minute order block, started to close immediately. So once price starts to close right above it, this first up candle would have been a good confirmation to understand that there's going to be a potential move to happen. And this is all based off of a higher time frame order block that we traded into, and we were expecting price to have potential move to the top side. So we went inside of it, and we looked for lower time frame order blocks that we could also potentially use. I'm going to look for another example real quick of using a higher time frame order block, refining it, and going to the lower time frames, and then mapping out another trade based off of having multiple confirmations. So right here, this last down candle before this up move is a potential 4-hour order block. What are we going to do? We're going to refine it by getting the 50%. You can see that price traded right to it. We also see that there's also this smaller order block on the 4-hour also right here. So you can see that we have inside of this major 4-hour order block, at the 50% of it, we have another 4-hour order block. So now we're going to go down even lower to the 30-minute time frame. We're going to look to refine it even more now to give us more confirmation for this trade. Where's it at? Damn, it's all the way over here, 2021. All right. So right in the start of 2021. I'm fucking up. Let's move all the way over here. Right here. Took me long enough to find it, but we got it. So we understand that we have these 2 4-hour order blocks in this general area. Now what are we going to do? We're going to anticipate price to possibly trade into a lower time frame order block. And what do we see? These last 2 down candles would be a 30-minute or a 1-hour order block based off of the 4-hour order block confirmation. And what do we see? Right here. Then we can refine this order block even more. Why? Because we can keep refining all of our order blocks to give us the best possible entry scenario. And what do we see? Inside of this major 4-hour order block, we have the 50% of it. And inside of the 50%, we have another 4-hour order block. And within that 4-hour order block, we have a 1-hour order block right here. And you can see, if you would have used the 50% of that, had your stop say below it somewhere, this could have gave you about a 130 pip stop for potential if you would have held this whole move for potential 1015 over the span of a few days. But you can see this trade setup was all organized based off of higher time frame order blocks, and all we did was we looked for lower time frame order blocks within the same area to give us more and more confirmation for why price should have a reaction from that area. So let's move on to the next little concept I have to tell you guys. They come in all shapes and sizes, and as you guys can see, this big down candle, even though it's a major down candle, is still used as an order block, and you can see that right there. All order blocks aren't going to be looking the same. You have to train your eyes to look for certain things because they all look different. They all come in different shapes and sizes, and some are way bigger than the others. Like here, you can go to the weekly time frame. You can find the same thing right here. This down candle is an order block, and you can see price traded into it and had that reaction off of it. You can see right over here too. This last down candle is also an order block. Even though these are major down candles, they are still being used because this is how the algorithm works. That you can see that being traded into. Let's look for another example on the weekly time frame right here. This weekly order block gets traded into, has a big move from it. Let's look for another one. You can see, look at these last 3 down candles. You could possibly use this as an order block based off of maybe the 3 week or something. I don't even know if 3 week is a thing. Yep, right here, the 3 week time frame. You can see that this last down candle before its up move. Let's say now we do what we do with all of them. We refine them, get to 50%. Comes close but doesn't really come there. But you can see you can map out all of these different trades based off of higher time frames. You can understand that no matter what time frame you're on, there's going to be order blocks. And that leads me to the last thing I'm telling you guys. Order blocks are on every single time frame. You can find trades with these on the 1 minute, the 5 minute, the 15 minute, the weekly, the monthly. It works on all of these time frames. I'm gonna show you one of the monthly time frame even working. Even though there's very few that are being respected, there's going to be some that you can see being respected. For example, right here, this last down candle that took these lows out before its up move. We're gonna pull this order block over. We're gonna do what we do with all of our order blocks. We're going to refine them, put to 50%. And what do you see? Price came to the pip almost to this refined order block before trading higher. And mind you, this is on the monthly time frame. This is about a 5,000 pip move that transpired from this small little area that we refined based off of the monthly time frame. And this is all these concepts work on every single time frame. There you saw a move happen on the monthly. Now let's look right here. We look at these 3 down candles, consecutive 3 down candles. This would be an example of, what would it be? 1 hour 30-minute time order block where you can see price traded into it and had a move push away from it. These order blocks are on every single time frame. So that's really it. I have way more things you guys can know about order blocks. So if you want a part 2, make sure you like, comment, subscribe, and make sure you comment below part 2 so I know to make a part 2. But these are just a few things I think everybody should understand and everyone needs to know about order blocks, because there's a lot of concepts that go along with it. It's not as simple as looking for the last up candle before a move. There's a lot of characteristics to pay attention to. There's a lot of things that you got to keep into account when trading these order blocks. You got to keep the higher time frame in mind. You also got to keep in mind, is it refined? Is there a chance that it can go lower? You got to keep in mind, was it created during a certain time of day? Because if it was created, say, during the Asian session or the London session, then you know that there's a high probability that price is more than likely going to trade away from that area. So that's really it. Hopefully I taught you guys something. Make sure you rewatch this video a few times if you have to, because these concepts are very important. And once you backtest them and start to watch them for yourself and see them happen every single day, you're gonna understand what I'm talking about. So hopefully this video was helpful. Hopefully it was informative. Like, comment, subscribe, and I'll see you guys in the next video.